the session in next 1 minute. Good evening, everyone. Welcome to today's session of After Hours with William O'Neill India. I hope everyone's doing well. And before we go ahead, I'll just like to give a small disclaimer that any security that you might discuss in today's session should not be considered as a buy or sell recommendation. And we're just doing it for education purpose. So without taking up much time, I'll start with Nifty 50's chart analysis for the day. So following some global cues, Nifty had a gap up opening, a mine gap up opening of around 60, 70 points. Then it even traded above the 17,600 mark, found the day's highs near the 17,600 mark. Yep, this is the levels. And then there was some selling pressure, and Nifty could not sustain these highs. But during this time, even Nifty reclaimed its 50 DMA. That was a good setup. But as you see, like once it reclaimed, it went back in. And even probably retested it, even retraced below the 50 DMA, and then at the end managed to close marginally above the 50 DMA. All of this was on a very low volume, and at this moment, probably like we in search of a good move, like probably to take that market from a rally attempt to a confirmed uptrend. That is good move. That is a follow through day, an up move of 1.5% on higher, on volumes higher than the previous day. But as you can see, what we'll be discussing in the next slide is that probably Nifty is kind of at the moment very jittery and very range bound at the moment. If one looks at it, it probably found support near the 100 DMA, and it is finding resistance near the 50 DMA at the moment. Look, I mean, at the moment, Nifty did reclaim its 50 DMA, but it's not a convincing retake. If you look at this candle for the day, it wasn't a very convincing candle. Probably something like this, like on the upside would have been a very convincing candle, and that too on high volumes as well would have been really convincing. But at the moment, market is not looking convincing. But yes, like with one follow through day, probably like, I mean, the status can change. Probably why I'm saying this with one follow through day, the status can change is the Nifty. If the follow through is staged now, I mean, with this kind of a setup where Nifty is trading very close to the 50 DMA, with the FTD or the follow through day, Nifty will be well above the 50 DMA. And on the O'Neill front, on the technical perspective, that would be a tick box or a check box on both the aspects. Like we have a follow through day, and Nifty is probably trading above the key moving averages. So that would be a really good sign. So till that point, the search for the FTD continues. And in this meanwhile, if probably Nifty breaks down on the 16,747 level, the Nifty would be probably shifted back to a downtrend again. Talking about the top gainers and losers uh, for the day, the top losers were the JSW Steel, NTPC, Bajaj Finserv, SBIN, and Coal India, as it declined 1.8%, 1.65. Bajaj Finserv by 1.6, SBIN by 1.6%, Coal India by 1.5%. Talking about the sector view, if we talk about it, was kind of a mixed bag. If one looks at it, your Nifty IT was the most was the heavyweight decliner. If you look at it, this is the heavyweight decline of 0.9%. The other major notable decliner was your Nifty Metal and then your Nifty PSU Bank, if you look at it. On the flip side, if you look at it, Nifty FMCG probably held up the market uh, slightly by Nifty Bank and your Nifty Financial Services, which we talk about. If you talk on the key news front, on the macro front, UK September CPI it continues to rise, and it was at the 10.1% mark, which was higher than the estimate of 10%. KPIT released its Q2 FY 23 results with revenue increased by 8.6% QOQ to 744.8 crores. EBITDA increased 3.6% QOQ 137.9 crores, while EBITDA margin contracted by 90 bips to 18.5%. PAT declined 2.3% QOQ to 83.4%. Overall, I mean, it was probably a mixed set of numbers if you look at it, but on the growth front or from the management commentary, that was the more positive part for the company. I mean, the organic outlook, the growth has been increased from 23 plus percent, like higher than the 23%, uh, from the range of 18 to 21% that they had guided in the earlier quarter. If you look at the margin outlook, that has also been upgraded to 18.5, 19%, which was much below. The outlook was much below for when it was released in the previous quarter. If we talk about DB Corp, that was a big miss. DB Corp revenue increased by 20.5% YY to 538.3 crores. EBITDA declined by 10.8% to 90 crores. EBITDA margin was the main where probably there's this huge miss of 590 bits that led to margins contracting to 16.7%. Even impact declined by 9.3% YY to 48.7 crores. RBL, your Q2 FY23 revenue increased by 15.2% YOY. EBITDA increased by 1.9% YOY. EBITDA margins contracted 130 basis YOY and PAT increased by 20.4% YOY to 6.5 crores. If we talk about the bigger segment of the market, probably the Nifty top 200, your Nestle Industries was the one that probably was the one result that did beat the estimates, and revenue increased by 18.3% YOY to 4591.3 crores. EBITDA increased by 6.7% YOY to 1016 crores. Your EBITDA margins, however, contracted by 230 basis YOY to 22.1 crores. PAT increased 88.3% YOY to 668.3 crores. Overall, what the company the past quarter phase that both it had a robust your urban and rural market that was led to your growth in the revenue as well as on the EPS side. If we talk about the chart of the day, the chart of the day for us is Praj Industries. And if we talk about, I mean, before we go about talking about the company in terms of the fundamental and your from the O'Neill perspective and the technical view, the thing is that I mean the market at the moment is in rally attempt. We still don't have a follow through day, but we can keep stocks in our watch list to understand like which are the better setups that are happening with a good fundamental profile. And once probably when the market isn't confirmed after a follow through day, these are the stocks that can be looked out for. So the Praj industry is more like more or less a proxy play on the ethanol blending program that's happening in India, and the government of India expects ethanol demand to. Hello. Yeah, so the government of India expects the ethanol demand to CAGR at 30% over FY 22 to 25 to reach 10.2 billion liters, to achieve 20 times 20% blending from 10%. Ethanol capacity is also expected to rise 26 by 2x. And if we talk about the setting up of the plants, uh, Praj Industry earlier had a market share, a domestic market share of 60% in this category. Now it has a market share of around 66% from this quarter. And in FY22 as well, global ethanol production capacity uh, uh, by using Praj's technology has crossed 11 billion liters per annum, which is leading to a global market share of 10% for the company. Overall, if you talk about the Q2 FY23 result, it was a really good result where revenue increased by 71.6%, EBITDA increased by 67.1%, and even your margin was stable at around 7.81%. There was good order inflows at around 9.8 billion rupees for the company, and there was market share gain. And overall, if we look at from the broader or the longer term perspective as well, it is a debt-free balance sheet company, lean working capital cycle, and overall the financials of the company remains really good. And now coming to the technicals and the O'Neill point, if you look at it, uh, the master score is really good. The EPS ranking is good. The RS line is trending higher. The blue dot that's getting formed. And at the moment, like once it did try to break out, but it was an unsuccessful breakout, and probably a re-breakout is what is required at the moment. What we talked about the fundamental profile that can be seen in the last few quarters as well. And even if you look at the 23 estimate, the 24 and the 25 estimates, the EPS estimates has been rising at a very decent pace. That is around more than 30% for the next few years. And similarly, you can see number of funds increasing as well. So all of this is a really good sign. So at this moment, what is probably required is for the market to come back to a confirmed uptrend, and in that phase, if we probably can get a good re-breakout as well. So good setups, good fundamental stories, good business models is the one we should be tracking, and should be keeping it on our radar to understand things better. So that's it from my side, and stay tuned and stay connected with us on the pre-bell space, the after hours space as well. Pre-bell morning at 8:45, after hours in the evening at 4:30 p.m. Thank you.